All right, what is up, tycoons? Super excited for today's video. We're going to be taking a look back at ticker symbol VIX. Okay, this is the volatility index, aka the fear index, the fear gauge for the stock market. All right, based on the S&P 500 futures, and the S&P 500, option contracts. All right, so we're giving an update on this one. This was a viewer request actually because I just did a VIX market update here recently, and I had a request in the comment section. Just a reminder, I do viewer request every single week. Okay, so we're gonna zoom in here, looking at our we're on the 4-hour chart right now. Okay, and we're actually gonna go back to the daily chart real quick, just so you guys can get a good understanding of my levels and how I have them drawn up. Okay, so we have our most recent swing highs to our swing lows. All right, just so we can try to understand the VIX. Okay, and then we have our previous weekly candlestick, highs and lows right here as well. Okay, so the main trend lines, okay, that we are looking for is these two right here. Okay, if you noticed in my last video, I was really highlighting these two, and I noticed how I mentioned how we did hold them as support very well here and here. Okay, 1 to about 3 days we held them as valid support, and here recently we even went as low and tested this purple trend line as well, and we bounced very hard. Okay, and everything correlated correlated and aligned with each other very well. Okay, if you think about the market factors, market conditions we had CPI data coming out here on the 10th. Okay, on June 10th, revealing May CPI data. All right, so try to look at it in the grand scheme of things. Okay, from before that happened. So we know here on the 7th and the 8th, the VIX was still falling, staying below our 25.47 resistance level. I said below 25.47, I'm still bullish in the market, right? And I gave a video on a few stocks that we were bullish on, and we had very nice bullish plays on those stocks, right? And we were able to gain very nice profits. Okay, because what happened was we broke this trend line as support, but this trend line here, okay, was a very, very valid support level. All right, and we wicked below it, found support, and we rose up. We broke past the 25.7 level, 0.47 level, where I said we're bullish in the stock market, below this level on the fear gauge on the volatility index. Okay, and we skyrocketed. We hit highs almost of about 29.75. Okay, so grand scheme of things, all right, the main thing that I'm looking at is VIX needs to stay below this 50% retracement on the Fibonacci level. Okay, so I want to see VIX stay below 2869. All right, now what does this mean? This means that we may see more pricing in, okay, of inflation and things like that on the VIX, okay, from between about 27 up to about 2869. Okay, so I wouldn't be surprised if on Monday, if the market opens and we're trading above 2761 on the VIX, and even if it rises up to 2869. Okay, but I want to see this happen. Okay, I want to see these wicks get eaten up. All right, I want to see them drop back down. Okay, same thing when we were wicking below. It wasn't as aggressive, right? But we did come below and we acted as valid support levels here. We're going to be looking for the same thing. Okay, we're going to be looking for this immediate trend line to act as a resistance level, and we know that if this one doesn't work, okay, we have our major resistance level at 2869, and then we have this purple trend line coming down here as another resistance level. Okay, so if you are looking to get into any long positions, I would be cautious. Okay, and I would wait. All right, because we are not in bull market conditions anymore. We're below that, or we're above that 25.47 level, and we were able to stay below that level for 1, 2, 3, 4, 5 days, 5 trading days. Okay, but the past 2 trading days, we have broken out of that level, and VIX has been on a very big breakout. Now, the thing is, will this breakout continue? Okay, you have to ask yourself the question, are market makers trying to drag stop losses? Is that all they're doing? All right, we're going to take a look at /ES right now, and that is the S&P 500 futures, a market update video on the futures as well on /ES. And what we did was we went over this bearish pattern here. Okay, it is known. All right, we're still looking at the daily chart. This is known as a rising wedge. Okay, ascending wedge. This is a bearish pattern. Okay, we broke below that trend line here. All right. And this supply zone here acted as a very valid resistance level, aka supply zone. All right. Now, if you watch my videos, you know that supply zones are areas where there is an imbalance in the market of supply orders. Okay. Meaning that there's more sell orders, more sellers in the market at these areas than there is buyers. Okay. That's what these red boxes are. These green boxes here are demand zones. Look at the demand today. Okay. Over the past 2 days, here's our 8 hours of, 2 4-hour candlesticks or 2 daily candlesticks. Look, buyers have not been present in the market. Okay. We stepped down, we came into here, buyers nowhere to be found. Okay. No demand in the market. All right. At the 4,100 to 4075 levels on SPY. Come to back down here, no demand again. Okay, we try to rally back up and give a small little bounce. Okay, here from 4013 up to back up to 4025, and we get rejected right there again. Okay, so what we're seeing is two failed demand zones, no buyers stepping into the market, and obviously that was due to our CPI data that came out today. Okay, and we fell straight down in. We did come in and find demand in here. Okay, right around this 38.90 to about 39.10 level on /ES, the S&P 500 futures. That is our demand zone that we did actually see buyers step into the market. Okay, so we're going to zoom in a little bit more to the 5-minute chart so you guys can see. Okay, and if we look here, this is today's price action. Okay, so here's 8:30. Here's 8:30 in the morning. The futures dropped super hard. And this is when we saw the stock market dropping. Okay. And here we have the open. Okay. We opened up about 9:30. We tried to rally. Okay. And all we did was, that was just a little bit of demand in here. Okay. When the market opened right here at this candlestick, and we came up, buyers came in, but all of those buyers were evaporated from the market. Okay. After market opened, there was no more buyers after 9:45 a.m. Central Time, and all we did was sell off the rest of the day. Okay. And what happened was we came back down into this very critical level. All right. And I'm telling you guys, this is the very much area you want to watch. Okay. Right around in between 38.90 up to 39.10. Okay. My specific demand zone is actually about 39.05 to about 38.92. Okay. And I actually did enter some long positions down here in my demand zone. Okay. So we are up on the price action a little bit. We'll have to see if the options reflect that. But what I'm looking for, okay, is going to see is if we get a little bit of a dead cat bounce. Okay, so what happens here is, we came down, and again, this is a 5-minute chart, so this is a lot of consolidation. Okay, we're just consolidating. We came up in here. Again, there was no buyers present in the market, so really this is kind of a supply zone here. So what we can do is we can go ahead and turn it to light red. We'll go here and click more, hit HSL, and then hit 50 on it. And this is going to be our new, resistance, aka supply zone. Okay. So, if you are looking to long the market on some very risky trades, what you could do is you could enter in about 39.05 and have a stop loss below 38.92. All right. Or you can be more patient and you can wait for us to come down to the level of about 38.92 instead of stop loss below 38.90 on the stock market. Okay. Again, no financial advice. This is just my opinion based on the futures. And, a lot of times when we have these overreactions, okay, if you look and do a study, all right, most of the time in a bear market, that is when you tend to see the biggest green days. Okay. And that's one way that they trick retail traders, okay, into getting back into the stock market, right? Technically, when you're in a bear market, about 58 of the 100 most bullish days in the past, 100 years of the stock market have come during a bear market, right? So that means about only 30% of them actually happened in a bull market. All right. So even though the market has been very bearish and we're pricing in a lot of S&P CPI data, inflation data, interest rate hikes, things like those. There are extremely lucrative trading opportunities in the stock market. Okay. Even if we go here and look at, we'll look again, this is a 5-minute chart. Okay. So if we're looking here and you bought into demand, okay, let's say you see the first initial dip into demand, we rally up, and then, the rally does not push us into our supply. All right. We come back down into demand. Okay, so let's say around 11:40, if you bought into the S&P 500, okay, on a day trade. All right, here's what we're going to do is we are going to go to the SPY future contracts. All right, and we're going to look at some of the futures. So, or not SPY futures contracts, but SPY option. We're going to pull up our option chain, go to SPY. All right. And if we look at the June 13th, okay, which is the, the Monday expiration date, right? And let's just say we clicked on our 391 calls. Okay. So what we're going to do is copy this, and you can actually go into here and paste this into your chart data. Okay. So again, we went over how on /ES, which is the SPY futures. Okay, we went over here at how at around about 11:40. What time is that? Let's say here. Okay, yeah. So 11:40. Okay, this is when you can enter into your demand zone for a very quick day trade, right? Because we're seeing the huge sell off. This was previously a demand zone. We did bounce a little bit. Okay, so we came down in here into demand, and you can see the price action much better on a 5-minute chart, right? On the 4-hour chart, it just looked like we just dropped straight down into here. But now on the 5-minute, you see we come down into demand, we bounce. Okay, and then we come back down, and what do you know? Where this previous demand level, we're bouncing a little bit, and then we come back down. We hit this demand, bounce, bounce, bounce until we rally back up into this level and come back down again. Okay. So, based on the price action for today, this is acting or acting as a very, relevant demand zone. What we're going to have to see on Monday and over the weekend in the futures is, are we going to see buyers step in, right? Are market makers going to step in at these levels? Or are they going to be absent from the market, and are we going to fall lower, right? So it's a really, really critical level, really about 38.90 is my very critical level. If we get below 38.90 and that starts to act as a valid resistance level, the SPY is going to be in a bear market, and things can be pretty rough from there. So it's going to be really interesting. Let's go ahead and copy and paste, okay, those option contracts that I was looking at. And again, we're looking here, all right, and we're going to look at about 11:40 entry. That's this candlestick right here. And look for that move, okay, if we would have bought in here and then played the move up until here, okay, up until our supply zone. All right, as we can see here, that was a 3-hour, 45-minute trade, a 1% move on the S&P 500 futures, okay? But how does that relate to options, okay? And we're going to go ahead and look in here, and I'm going to show you guys how trading options can be very lucrative any single day, okay? So let's go to the 11:40 candlestick right here, okay? And here's our 11:40, and we come over here to around the 3 o'clock range, and those were up around 50%. And about 3 hours, what did we say? 3 hours and 40 minutes was the move. Anywhere from up 40% to about 60%. If you would have been a trader, you could have got about 65% on that, right? And nobody's perfect, right? But when you're trading very volatile options and you're seeing these moves, okay, and we'll go ahead and look back at the futures chart again, right over here, okay. And if we look at /ES, like I said, this is a very, very, in my opinion, low risk move. Okay. What we've done is we've seen the big initial sell off. Okay. We waited for the day, and we enter about halfway through the day. We say, okay, hey, we're starting to consolidate, show some good price action, 11:40 in our zone. And we come over here to about 320, 330. Again, look at that. That's only a 0.9% move, around a 1% move on the S&P 500 futures. This is why I trade SPY every day, SPX every day, is because being able to catch a 1% move on the futures or the stock SPY, the S&P 500, okay, can net you anywhere from 20 to 30 to 50% just off of a 1% move on the SPY, right? So imagine if you would have came in here and you would have longed it, okay, and then once you hit your price target up here, you shorted it, okay? So let's look at some puts, because I actually scalped puts on the way down very, very well, okay? And I'm going to show you how I did that and why I did that. What I did was I used one of my strategies, okay? One of my favorite scalping strategies, all right? Using the VWAP, okay? We're going to be taking a look at the VWAP. I'll go down to a 1-day, 1-minute chart, all right? So you guys can see even better. This is the candlestick action for the whole day. All right. And what we had happen was we came down, and we started to rally in this demand. Okay. Again, this is that 1140 zone. All right. Once we see, these EMA lines trading below our purple VWAP, we can tell that the trend is clear. Okay. So we're coming down, we're coming down, we're coming down. It's clearly a downtrend until we hit a demand zone. Well, we hit this demand zone, and you can tell, or a very common area of rejection is going to be your VWAP. Okay. So what happens is we enter here on demand, we sell up here in supply right around the VWAP. Okay. As soon as we get above our VWAP on the 1 day, 1 minute chart for the daily price action, we do not hold it. Okay. We get above for 2 minutes, and then on our 3rd minute later, we crash below. And again, that's a sign. Okay. So you come in here on demand. All right. And you have this previous demand zone, which that there was a supply imbalance because all we did was sell off, right? There was no demand in here. We came in here, we tried to bounce, right? But none of those buyers were present. So we can tell, okay, hey, clearly from here to here, there's an imbalance of sellers because all the price did was push dramatically down here. Okay. Well, now we're seeing that, hey, this is a demand zone. We're seeing the price action move violently from here back up to this level. And now that we know that this is a supply zone where there's lots of sellers, you come in here, you take your profit, and you enter a short position, and you short it back down into demand. Okay. And what I did at the end of today, I took a very, very light position in demand. Okay. And we have rallied a little bit more. And we're just going to look to see and continue. Okay. Hey, well, we may come back down, dip into demand, but we have tested this, and this is a valid demand zone. We do know buyers are present in the market at these levels. And we're going to look to see over the weekend, futures and after hours and pre-market, before Monday opens, are buyers going to step in at this price level and drive the price up higher? And we know if they do, then our swing trades will be in profit, and we can close in profit somewhere up here, or possibly even up here if we break past these resistance levels. Okay. If not, what we can do is we can hold. Okay. And we can look to set a stop loss below about 38.92 or 38.90 on /ES. If we start trading below there, most likely we're going to head back down into our next demand zone here, right about between 38.65 to 38.80 on /ES. Okay, so thank you guys for watching. Hopefully this was a good little market update for you guys. And let me know what you want to see more from me. Okay, do you like videos like these? Or do you guys want to see, individual tickers, or do you like kind of like these whole broad market-based updates? Do you understand what I mean when I'm talking about VIX and when I'm talking about ES and the futures and things like that? Because it really elevates your trading game, right? If you know what stocks are weighted heavily in what sector, and you can look and you can see, okay, well, hey, this stock is in the S&P. It's not performing very well. It's a very off day for it, but the S&P itself is actually rallying, right? And you can start to notice certain imbalances and things like that. All right. So appreciate you guys watching. Don't forget to like, comment, subscribe. Let me know down below the next video you guys want to see. Okay. Is it another overall stock market update on the VIX and, the futures? Or do you guys want to see something individual, or do you need a little bit of a strategy tutorial walkthrough, something like that? Thank you guys. Appreciate it.